So I used to be a mortgage broker. It wasn't my kind of thing, so I gave it up, but I want to share the things that I've learned. And in this video, I'm going to share what an offset account is and its benefits. So let's start with what an offset account actually is. So to put it simply, an offset account is like a transaction account. It's like a savings account. That's the way I'd like to put it, where you can put money in and take it out as and when you please. And it's usually the case where it's one offset account linked to one home loan. So let's just say you have a 500k home loan. Now you're going to be charged interest on the entirety of the 500k. So now let's look at the offset account. If you've got nothing in there, that means you're going to be charged mortgage interest on the full 500k loan. Let's say for instance you have 100 grand and you put that all into your offset account. So now you take the 500k, subtract 100k, which makes 400k, and now you're only going to be charged interest on the 400k. So the more money you put into your offset account, the less you'll get charged on your home loan. And there's two particular types of home loans. You can get a home loan for an investment property, or you could get a home loan for the home you live in. And there's also two ways that payments can be made. So typically for an investment home loan, most people tend to go with interest-only loans. That basically means that you're never actually paying down the loan, you're just paying the interest for it. Whereas on the other side, for families that live in their own home, you've got principal and interest. And in that circumstance, a portion of your mortgage payment goes towards paying down the actual loan, and the rest of it goes towards the interest. I think a good way of looking at it is the interest is charged by the bank or by the lender to allow us to borrow the money in the first place. And something to keep in mind is that interest is actually calculated daily. So depending on what you have in your offset account on a particular day can determine how much interest you end up paying for your home loan. So let's just talk about the benefits of having an offset account. One of them is the fact that you can deposit all your savings into this savings account and access it whenever you need it. So the alternative would be just using all that money to paying down your home loan. But in that instance, you can't really access the money as easily and you'll have to go through your lender, which is more of a longer process where they have to assess your current situation. Another benefit is when it comes to principal and interest loans, the more money you have in your offset means that your mortgage payment is actually paying down the loan more than it going towards the interest charges. So it massively works in your favor because over time you're going to be paying less interest, which means it actually shortens the loan term. And typically people get it for 25 to 30 years, which equates to actually saving thousands on interest payments. One thing to bear in mind with offset accounts, typically lenders charge like an annual fee. It does vary, but it could be like $200 or $400 a year. But with the savings that you make on interest payments towards your home loan, it's well worth it, and especially if you've got multiple loans. And the other thing to check with lenders is not all offset accounts cover 100% of the mortgage loan. Some do 80 and others vary. So that's something to keep in mind. And also bear in mind that not all lenders or home loans allow offset accounts, because some of the lower tier lenders, in order to save on costs and provide you a better interest rate, they may not offer offset accounts at all. So there's a couple of ways where you can maximize the benefits. And one is whenever you're getting paid your income from your employment, making sure that it goes directly into your offset account. Because interest is calculated daily, as soon as that money hits the account, you're saving on interest payments. And the longer it stays in there, you continue to save. And when it comes to purchases, what I do is take out a credit card, and with that credit card I make all my payments for that entire month, and then I pay off that credit card at the end of the month. This means all the money that you've earned from your income stays in your offset account, which saves you interest. And it's only on the day that you have to make a payment towards your credit card, which is when your offset balance will decrease, and then you end up paying a little bit more interest on your home loan. So in conclusion, offset accounts are a great way to shorten loan terms, to pay more towards your principal, so reducing your home loan, and to pay less interest to the lender. All your funds can be accessible because it acts like a savings account, and I found it a great option because it's working well for me. So if you like this video, please leave a comment. This is actually the first time I've done a video like this. If it interests you, then I'll be happy to share more of what I've learned when I was a mortgage broker. So fingers crossed, I'll catch you in the next one.